Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, this episode is about market intelligence. I read Bloomberg's forecast every weekend because I believe this is the narrative Wall Street wants me to believe. So I read through it, I share the highlights with you, then I make up my own mind. From last week, predictions. The AI rally isn't over. Pretty much every institution warns investors not to expect another year of equity returns topping 20%, just like they did a year ago. What are they talking about here? S&P 500 goes up 20%. Last year it goes up another 20%, right? And they're saying this year, no way. Can't happen, right? But few are ready to call an end to the artificial intelligence-fueled stock boom. So I agree in part. I believe AI and tech will continue to be hot in 2025. I don't know if it'll be able to hold up the market like it did last year, meaning the Mag 7. Maybe our market breadth problem will take it down. Maybe 5% treasuries will take it down. Persistent or higher inflation, too strong a jobs market, or some geopolitical issue, right? But my forecast is that AI, quantum software, data centers, etc., they will remain the place to be, at least in the first quarter. I also believe the eVTOL space will heat up here and there during this year. I believe XRP will be the biggest story in crypto for 2025, and the ISO group may surprise the entire crypto world by December. I think the first quarter will be thick with volatility, but by the end of the year, I believe the S&P could post another 20% gain. That's right, a three-peat, something the S&P has only done twice in history. Now, what is Bloomberg saying this weekend? Predictions. AI will surpass you this year. By the end of 2025, it will be evident to most educated observers that the best AI models can beat most experts on intellectual tests. The author says it'll beat me on an economics test. I have no doubt. Now, guys, it doesn't matter if we don't like it. Even if we hate artificial intelligence, the mistake will be pretending it's not happening. The second mistake will be not to act on your knowledge. I guess what I'm saying is if this thing is going to ultimately replace me, I want to own a chunk of it. No matter where all this AI and quantum is going, no matter what the future holds, I'd much rather face it with a mountain of cash. Do you feel me? Bloomberg's predictions go on. Fusion's going to work. That's what OpenAI CEO Sam Altman said in a wide-ranging interview with Bloomberg Businessweek that's worth reading in full. So what does he mean by fusion? Let's ask AI. In artificial intelligence, fusion refers to the process of combining data from multiple sources to generate a more accurate and comprehensive understanding of a situation by integrating information from different sensors or systems, essentially creating a more complete picture than any single data source could provide on its own. This is often called data fusion or information fusion in the AI field. Guys, let's face it, our feelings on the matter don't matter. These things are going forward with or without our consent or support. We need to use these tools because we know our enemies are already using them. Even our friends are using them. Look at the YouTuber CSI. He used AI to teach himself how to trade Forex, how to use a trading bot. Now he sends me spreadsheets with 10 profitable trades in a row, and now he's teaching his subscribers how to do it. He told me this morning that market makers are complaining that retail traders are using AI. This is the article Bloomberg was talking about. Sam Altman on ChatGPT's first 2 years, Elon Musk and AI under Trump. I think you need to read this piece. I don't care what the CEO of NVIDIA says about quantum. The public is going to demand AI applications. That's AI phase 2. AI is going to need quantum computers. Quantum is going to need quantum software. The entire industry will need more data centers, specifically new AI data centers. What the hell are those, you ask? An AI data center is a specialized facility designed to handle the high computational demands of artificial intelligence and machine learning applications, equipped with powerful computing systems and infrastructure specifically optimized for training and deploying complex AI models, often utilizing large numbers of GPUs and specialized hardware to process massive amounts of data quickly. In my last several videos, I disclosed all my positions, including those in the AI phase 2, quantum software, and data center spaces. I don't care what anybody says. This is where we are heading. This is the future, and I want to own a piece of it. Now, if you pour through all the articles on quantum, you'll see 4 names on the smaller companies come up again and again. Rigetti, RGTI, IonQ, IONQ, D-Wave Quantum, QBTS, and Quantum Computing, QUBT. That's a pretty good folder to have, right? Now that the CEO of NVIDIA took a giant dump on the quantum space, there's been a big pullback in the sector. Quantum computing stocks tumble following NVIDIA's CEO's cautious forecast. From that article, quantum computing stocks experienced a sharp downturn Wednesday after NVIDIA CEO Jensen Huang tempered expectations for the technology's timeline, stating that practical quantum computing could be as far as 15 to 30 years away. Huang's remarks, made during a Q&A with Wall Street analysts, prompted a swift market reaction, with shares in key companies in the sector plunging in pre-market trading. Rigetti Computing, which has seen its stock price soar over 1,700% in the last 12 months, dropped 25%. IonQ fell more than 13%, while D-Wave Quantum lost over 19%. Quantum Computing, which had recently announced plans to raise $100 million through a stock offering, saw its shares decline by 21%. Collectively, the sell-off erased more than $2 billion in market cap for the quantum computing sector. So the tone has completely changed. This guy says, I wouldn't bet on any of these market darlings right now. Quantum computing won't make a large impact on any existing industry in the next decade, and these pure play researchers might not make it that far. Here's a quick look at their most recent earnings report. So there's the chart. Take a screenshot if you're interested in this sector. On the left, it shows the quantum computing expert, IonQ, RGTI, QBTS, and QUBT. Then in the next column, Q3 2024 revenues, 12.4, 2.4, 1.9, and 0.1 million. Then Q3 net income losses, 52 million, 14.8, 22.7, 5.7. And then finally market cap, 6.9, 2.2, 1.6, and 1.2 billion. Okay, he's got a point. There could certainly be more downside for these high flyers in the immediate future. But what I want to know is, are these companies now takeover targets for the richest tech companies in the world? How much money do each of these names have left? How long can they last? For now, I'm only taking very small bites of names like these. I'm looking for a real bottom on all of them. Recently, I made a video for you guys on how I use subfolders to help with research and trading decisions. I'm concerned quantum could fall further, but I definitely want to watch this space going forward. So I labeled this folder Narrow Quantum List. That's because it only has the 4 small companies we're discussing. Because I can quickly sort these names differently, I wanted to show you just how much information you could glean at a glance by using your folders properly. On the left, I have them sorted by market cap. So who's the biggest? IonQ. Who's the smallest? QUBT. In the center view, I'm sorted by price. The highest price? IonQ again. The lowest? QBTS. On the right side, I shift the view to percentage change from Friday's close. Who had the best day? IonQ, up 6.88%. Who had the worst day? RGTI, down 11.06%. Because I use folders this way, I always know who fell the most after hours Friday, RGTI, and who's up the most, QUBT. The best part about grouping stocks I'm researching this way is I can check news for the stocks in the group by clicking the hyperlink when news surfaces. This helps me move quicker on trades, and sometimes all stocks in a sector will move based on news just for one of them. How many times have you seen ACHR move on good Joby news or vice versa? Too bad that phenomenon doesn't work with Cinemark and AMC, and that's for one simple reason. We have a piece of shit parasite running AMC. He will sell on any good news. We all know these are high-risk names, and now that the CEO of NVIDIA shit the bed, they are even riskier for now. They could just keep on falling. But let's review cash on hand. For IonQ, I see $365 million. For RGTI, $92.6 million. For QBTS, $178 million. And for QUBT, only $3.06 million cash on hand. But they just announced a private placement 4 days ago, hoping to raise $100 million. Now, I don't believe it will take 10 years for quantum to come around because nothing takes 10 years anymore. I think the AI segment of tech will demand quantum computing, and sooner than later. Why do I say this? Because artificial intelligence needs quantum computing because it can significantly enhance AI capabilities by allowing for faster, more efficient processing of complex data, particularly in scenarios where classical computers struggle with large data sets, intricate patterns, and computationally heavy problems, opening up new possibilities for advanced AI applications across various fields like drug discovery, material science, and financial modeling. The biggest reason I'm not ready to let this quantum thing go is because I know that 9 out of the top 10 largest tech companies have market caps between $1 and $3.5 trillion. I don't care if real quantum computing is 10 years away. Do you think these tech behemoths are just going to wait? They all have enough cash in couch change to buy all 4 of these companies. I say once one of these quantum companies make a significant breakthrough, one of the tech whales on your screen will just cut a check, not investment advice or advisor. Before I get to my calendar for the coming 2 weeks, I want to review this email I got from the Milk Road crypto guys. Are we about to see a 30% pullback? First off, they believe the Trump pump is over for crypto for now, and it appears like there won't be any new market lifting narratives until Trump takes office in 10 days. I completely disagree. On the 15th, we have a court date for XRP, which affects all crypto. That could be really good news, it could be a nothing burger, or it could be horrible news, which would give me an opportunity to buy the dip before the Trump inaugural rip, not investment advice or advisor. This coming Friday, we also have the first inaugural crypto ball. Are you kidding me? The Milk Road doesn't think this could be a catalyst for crypto? Crypto czar David Sachs to host inaugural crypto ball. What to expect? Crypto czar David Sachs will host the first ever crypto ball in Washington, D.C. next week, along with a VIP reception for crypto leaders. You mean to tell me there's no chance of a crypto rally this coming Friday night or over the weekend after an event like this? An event that actually leads into the Trump inauguration day? Next Friday, BTC Incorporated, along with Stand with Crypto, will host the inaugural Crypto Ball event featuring a VIP reception hosted by MAGA, a Trump-aligned super PAC. AI and crypto czar David Sachs will be leading the event, right? You mean to tell me the tweets coming out of this event on Friday night can't spark a rally? The Trump administration is likely to be the most overtly pro-crypto in history, with plans to implement industry-friendly policies. This also includes a comprehensive overhaul of financial regulations to address the sector's key priorities. The role of crypto czar David Sachs would be crucial in crypto policy framing, as he will serve as the bridge between the Trump administration and the crypto industry. Market analysts believe that he would play a crucial role in removing excessive regulations and bringing conducive policies for the crypto industry to function in sync with the traditional financial industry. This would also pave the way for building a strategic U.S. Bitcoin reserve. Besides, the anticipation over the reserve is also soaring, as Paul Atkins is also scheduled to succeed the current U.S. SEC chair, Gary Gensler. So Milk Road goes on to speak about four things holding down the market, the first being inflation. The U.S. job market has been growing of late, and when that happens, inflation often grows alongside it. Unfortunately, the market is nearsighted and ignores the fact that this recent job market growth is a little blip within a larger 3-year downtrend. Okay, but what about the trend line Uncle Frank added? What if the job openings are following a larger trend line? Milk Road's number 2, reduced rate cuts in 2025. The transcript of the Fed Reserve's December meeting just dropped, and in it, they hinted at slowing rate cuts in 2025. True, driven in some part by their fears of Trump's proposed tariffs, which, if implemented, could cause the cost of goods in the U.S. to rise further. All of this is bolstering the market's assumption that the next time the Fed meets to decide on rate cuts, January 29th, they're going to choose to hold. Well, that is absolutely true. This slide goes out to Donahue George. Milk Road's number 3 reason is lowering liquidity. Global liquidity, aka the amount of fresh cash sloshing around in the global financial markets, is lowering. Hell, it's been lowering for months now. The less liquidity that is entering global markets, the less fresh cash can find its way into assets like crypto. And now that the Trump is going to save crypto narrative has run out of steam in the short term, the effects of lowered liquidity can be felt a little more clearly. Now here's a slide for CSI. The DXY has regained its strength this week. You need to add that one to your ticker, Gunter. The fourth Milk Road concern is the dollar is still strong. That dip we saw in the strength of the U.S. dollar in the first week of January, it reversed itself. Why does this matter? Financial markets are simps for assets with strength. If the U.S. dollar is too strong, it means investors have high confidence in the good old USD and are less likely to put their money into riskier assets like crypto. According to Kyle at Milk Road, quote, "We are watching markets closely here. If we drop below $90,000 Bitcoin, then I think we're getting the big 20 to 30% dip we've been expecting. We don't see much of a catalyst to markets until Trump is in, plus next rate cut decision not until January 29th. Well, Kyle, I think we may see some action on Wednesday with the SEC XRP court appearance. You could get your sell-off, and it could be that day. But I also think the inaugural crypto ball could mark the beginning of a rally that explodes straight into Inauguration Day over the weekend. We shall see. Now let's go through this events calendar step by step so we're prepared for what's ahead. Only 8 days to what I call Trump-O-Rama Inauguration Day. Tuesday the 14th, PPI. Wednesday the 15th, CPI. So we're switching from jobs data back to inflation data. And we also have a court appearance in the SEC versus Ripple case on Wednesday the 15th. Now, because Gensler is a tiny, bitter, defeated egomaniac, if he can screw us one more time like Biden's been doing before he leaves, I say he will. If this is a bad day, we could see a crypto sell-off here. I should warn you that Wall Street itself will begin reporting its earnings with JP Morgan Chase, Goldman, BlackRock, and Citi all reporting before the open on Wednesday the 15th. Their forward-looking comments will be leaking out into the press all day that day, so be ready. The following day, we'll see earnings from B of A, Morgan Stanley, United Health, and Taiwan Semiconductor, all before the bell again. The big banks and brokers will be giving us their outlook for 2025. Expect a lot of hand-wringing about Trump tariffs. We could also get a longshoreman strike at midnight on the 16th after initial jobless claims, which comes out every Thursday morning. Remember, on the job side, good news is bad news for the markets at this time. So this week, we start with inflation data and switch back to jobs data on Thursday. Friday the 17th is the first ever inaugural crypto ball, and we'll be watching the tweets for 2025 crypto information leaks. Something big could leak out of this event. Let's see what Trump and other crypto dignitaries have to say about it. But I also think this event could mark the beginning of a big crypto rally, charging right into Monday over the weekend. But Monday is Inauguration Day. Did you notice that all the dates from Tuesday the 14th to Thursday the 23rd are highlighted in yellow? That's because that's when the federal government could hit the debt ceiling limit, forcing the Treasury to take extreme measures. Now, what should concern us all is that debt limit time window includes PPI, CPI, and Trump's Inauguration Day. That's only 8 days away. And did you know the markets will be closed on that Monday, the 20th, because it's also MLK Day. That makes the VIX calls expiring that week on the 22nd very interesting to me. And for you crypto guys, think about it. The markets will be closed on Monday, the day Trump is inaugurated. That could be a huge day for crypto, a huge weekend. So the question is, do the bad actors have anything planned for us between now and then? Maybe another California wildfire. That possibility has me on Swan Watch until Trump moves into the White House and Gary Gensler moves out of the SEC. If all that wasn't enough, Trump's inauguration week is also the week the World Economic Forum meets. The last week of January will feature this year's first Fed meeting, culminating with no rate change on the 29th, unless, of course, we're going to hell in a handbasket at that time. That's followed by the Fed's favorite indicator, PCE, which comes out on Friday the 31st. Take a screenshot so you know what's going to happen and when, kiddies. This could be a bumpy 3 weeks, so buckle up, buttercups. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.